Good morning. I'm Gord Long with the Financial Repression Authority. I have Martin Armstrong joining us today. Martin is editor and publisher of Armstrong Economics. Welcome back, Martin.
Well, thank you for inviting me.
I appreciate you joining us again. Martin, we have so many new listeners since we last talked, and it's been a year. I wonder if you could just give them a brief understanding of your background, things you're involved with, and Armstrong Economics.
Well, we began in the 1970s and was primarily, I would say, currency. It was when the floating exchange rate began in 1971. There was really nobody doing this. So we were, I would say we were probably the largest Forex advisor in the world because it really one of the first. And the difference between an American and European was quite astonishing, is that after World War II, European politicians, they used the value of the currency as proof that they did a good job. They'd say, see, the Deutschmark's up, 20%. So everybody would cheer. Whereas in the United States, if an American politician said, vote for me, it's up against, the dollar's up against the Mexican peso, everybody would have said, yeah, so what? So currency became more of the international thing, and that's really where we developed, we have offices in China and in Abu Dhabi, in Europe, so we have a very international client base.
Just on the subject of currencies, what do you think China is doing with the yuan and with the strength of the U.S. dollar? Are there currency pegs that are exposed? I'm thinking of the Hong Kong dollar or the Saudi rial.
Yeah, pegs never work. They always break, largely because, it's politicians trying to set the value of something for political purposes. That was, George Soros became famous, shorting the British pound back in the 90s. And, I actually was the one that the British government called, and they said, how long do you think this is going to last? I said, listen, you got to devalue. And this is an example. Major had run for election promising not to devalue the pound. So he could not do it. And so I rewrote a paragraph for him. I said, we're going to allow the pound to float to seek its own level. Great. He came on, said that in 15 minutes, and that was the end of the crisis. It's the same thing, but, it's to a politician, it's night and day.
Any comments on what the Chinese are doing with the yuan right now?
Well, effectively, they're trying to still maintain some sort of a controlled economy, but they're losing the grip of it. There's so much money that has been moving out, and a lot of people misunderstood a lot of the economic statistics because they didn't quite really understand what was happening. You had many Chinese companies that were borrowing in dollars in Hong Kong, converting it back in, and they're paying 1% in Hong Kong, and then they were bringing it back into China, collecting 5 to 8%. So everybody looked at that and said, oh, wow, look at all the, China's getting all this capital inflow, the economy's doing good. It had nothing to do with the economy. And then when that stopped, they shut down shadow banking. All of a sudden, everybody was surprised that, oh, gee, the Chinese economy is going down. It was going down since '07. So it's not a situation that is going to be resolved anytime real soon. I think we're probably headed towards a new monetary system, but in order to do that, the dollar has to go up dramatically, kind of like it did in 1985. When it went up so high in 1985, the pound went to par, etc. That's when they formed G5. So we don't get there without the pain. And in this particular case, the euro is dead on arrival. That's an absolute joke. You have China in trouble. You have Japan's currency is really a closed economy. And these pegs are starting to go and under pressure because the dollar is really the only game in town to park big money. So,
Is
you
it
know,
is a
the
dollar?
big money can't park in China. They don't trust the bonds yet. They can't park in Russia, you know, and you can't go into Europe. I mean, it's been dollar by default.
That was going to be my question. So, dollar is just the most liquid and the least ugly, if I would, at least in the short term.
Pretty much. I mean, it's not that it's a fantastic situation. It's just, you know, the prettiest of the three ugly sisters. That's about as they put it, you know.
And you see that being
that's what creates the change. It's the rise in the dollar which will then create the change in the monetary system, the same as it did in 1985.
So you see the dollar strength being sustained until, in fact, there is a change or a forced change in the monetary system.
I don't think we're going to see a change before 2018. That's probably the earliest. But I would say by the time we're looking at some sort of changing in the monetary system, it's probably around 2020. And, I mean, this whole thing with negative interest rates doesn't work. This idea of quantitative easing, I mean, it doesn't work. The economies are much more fluid today. You know, everybody was expecting inflation because the Fed was increasing. You know, no, first of all, they were buying in 30-year bonds. So who sold them to them? China. Said, thank you very much. We'll say you're our 30s. We'll take 5s in exchange. And you have the emerging markets started expanding debt to more than 50% of the U.S. debt. And why did they do that? They were able to do it. They issued their debt in dollars because interest rates have gone down here, so pension funds needed high yield. So they went and bought all this emerging market debt. So you know, the money supply that supposedly the Fed increased didn't stay here. You know, it's very porous. And, I mean, if you look at real estate, Chinese have been the biggest buyers of real estate in the United States as far as the high price ticket stuff. And, you know, the IRS is even going after all this money buying real estate in New York and Miami. They've instructed the title companies, they must look behind who, you know, what corporation's buying what. They want to know who all the individuals now. So they're piercing all the corporate veils. So it's been all foreign money coming in, and you can see that in the U.S. stock market. Coming out of 2011, what led? That's the Dow. And it's the same thing as in real estate. When the Japanese were coming in, what did they do? They bought the high-profile stuff, you know, Rockefeller Center, etc. They don't buy the mom-and-pop houses. They all want show. So the foreign money goes into the Dow. So the Dow led the market all the way up. And S&P and the NASDAQ were lagging behind. Then, eventually, the S&P and the NASDAQ start to overtake only when the foreign capital begins to subside. But when we went down, recently you had the S&P take out last year's low, you had the NASDAQ take out last year's low, not the Dow. So it's a difference between domestic and foreign money, and international capital flows are really what drives everything, but it's something they don't teach in school, and most people don't really pay attention to it.
And it's hard to get any kind of data that's really timely on capital flows or actually liquidity at global levels.
We get basically most of the central banks contribute to us. Mm-hmm. Because they want the information themselves.
It's a separate question, but leading to some of the time frames you were mentioning, Martin, your economic confidence model, what's it telling you right now, and how does it fit with these target dates?
Well, the economy basically kind of peaked in September of last year. On a global scale, I mean, everybody's in a recession pretty much. Europe, you're looking at Asia. The U.S. has been kind of like a dead cat bounce. We rallied a bit, but you drive down the street and every office building still has signs out for, space for rent. So it's a different type. It's a very shallow rally, and it is largely a business cycle that effectively is showing you where things are developing. The last peak was back in 2007, and real estate actually peaked to the day of the model and on the Schiller Index. But what's important about that is you see a lot of these markets peaked back then. China, France, etc. They have not exceeded the 2007 high in the stock market. So they're in kind of 13-year economic declines, and I don't expect them to bottom before 2020. After then, maybe we get a change in monetary system, etc. Because the U.S. is realizing that there's a problem here, and the Federal Reserve wanted to raise interest rates. They've been lobbied by the IMF and everybody else not to. Why? Because of international concerns, not domestic. So the U.S. is realizing that with the dollar as a reserve currency, they're losing the power to control their own economy. So domestic policy objectives are being made secondary because of international. And once that happens, then the Fed can no longer do anything to help the domestic economy. It has to focus on what's going on outside.
I think that was at the core of Yellen kind of backing off on the number of interest rates or rate hikes that she had at least signaled earlier.
Yeah, because eventually the market is going to raise the interest rates because we're in a phase now where governments, federal, state, and municipal, are all in trouble. They're all chasing money like crazy. More than 50% of the municipal governments in Germany are all bankrupt. And, every government is chasing money. And they keep raising taxes. And that's another reason this quantitative easing is failing. It sounds nice that, you're going to increase money so we should get inflation. Well, if I give you $1,000 and then I say, okay, fine, but you had to give me $950 back, what did I give you? 1,000 or did I give you 50? They're raising taxes dramatically and enforcement. So the bottom line as far as disposable income is actually shrinking. It's not expanding. This is why Trump is doing so well. The people in politics and the press don't get it. But the middle class has been screwed every which way from Sunday. So it's more of a protest vote because largely I think Obama did more damage than people understand. He said, change you can believe in. And what did we get? Nothing different from Bush, basically. NSA expanding, Guantanamo Bay still there. He wanted to go into Syria, so Bush went into Iraq. What changed? And so they're beginning to realize, Hillary Clinton's owned by Goldman Sachs. Cruz, his wife, is the managing director at Goldman Sachs. So if you vote for either one, what are you going to get? Anything different? Probably not.
The same Goldman Sachs we've had for about 12 or 15 years now.
Yeah, look, this is what's going on. So the American public is starting to waken up to this, problem. And even if Trump doesn't win, our computer's projecting we're looking at probably a wholesale turnover of Congress by 2018, which is similar to what happened in Scotland. See, this is not a domestic issue. It's happening everywhere.
That was going to be my question. You see,
China has its equivalent of the Donald Trump. In Scotland, they voted to try and leave Britain. The vote was rigged. They stole it from them. So what did they do? They voted absolutely every member of the Labour Party out of the Scottish Parliament. A brand new party began. And this is what we're going to see. So you're looking at separation movements, and Barcelona voted to separate from Spain. I mean, it's everywhere. So this is looking at Donald Trump and think this is unusual. No, it's a global trend.
So if I said, the UK's got their Jeremy Corbyn, you've got Marie Le Pen in France, we got Brillo in Italy, and I can keep on going. You're saying they're just all the same, little different versions, maybe more right or more left.
I mean, even Bernie Sanders. It's not that so much the policy, but Bernie Sanders is kind of the anti-Hillary within the Democratic camp. I mean, it's quite amazing to see that he is still alive and getting a lot of the vote this far into it. You would think that Hillary would have just been coronated queen and that was it.
My observations, it seems to be the younger generation, the millennials, seem to be more socialist-oriented, and he resonates with them. I don't know if you've seen...
They don't understand. They tend to be more socialistic in the sense, but they don't understand the facts either. I mean, Hillary Clinton, for example, the Clinton White House was bought and paid for by Wall Street. Rubin was put in from Goldman Sachs as treasurer. He repealed Glass-Steagall, interstate banking, took all the restrictions on the banks away. Not the Republicans, it was the Democrats who did it. But they also don't pay attention, and the press will never say it because they're afraid they might hurt Hillary, who basically made all student loans non-dischargeable bankruptcy. The Clintons. They gave that to the bankers, too. Nobody wants to talk about this publicly. So all the student loans that are hurting all the youth, it's Hillary that did it.
What's your prognosis or thinking on gold, precious metals, and hard currencies now?
Pretty much still negative. What has to happen, and what you will see, all right, there are people that already know about gold, etc., and they're going to argue back and forth. That's nice, okay, but it's a very small segment of the population. All right, this comes back to Trump. What you're seeing here is what you need basically to turn things for the metals, etc. It's when the majority of this silent majority begins to lose confidence in government. That's when things start moving. And you can talk about, there's not enough gold, or the Fed's doing this, or banks are manipulating, or whatever. It means nothing to the average person. All right? When they lose confidence in government, and that's when things start going. And you may see that. The Republicans are really, really against Trump tremendously. And they rigged the rules for the last convention to get, to kind of screw, really, Ron Paul. They made the rules that if you didn't have enough votes, whatever, your name couldn't even be put in for nomination. So they just wanted to keep him out. Well, under those rules, the only person that can actually be nominated is Donald Trump. And then they're beside themselves. So they're going to change the rules again, and they really are trying to get some sort of a broker deal. They don't want Trump in. Why? Because he's an outsider. And therefore, if he's not owned by the banks, he's not owned by all the rest of the stuff, and he's funded this thing himself, they don't know what he's going to do. And I can
dangerous maverick.
I can tell you one thing when in studying law, one thing that they teach you, you never ask a question you do not already know the answer to. They're mostly lawyers. They do not know what he will do. I mean, putting up walls and all this other kind of stuff in Mexico, that's all fluff. I mean, nobody can actually do that kind of stuff. It's like when he gets a bill before him, the president is the one that gets to veto. Then it takes 2/3 of the House to override it. So what they're scared about is he's going to see, spending bills that their brother-in-law's on or whatever, and he's going to say, no way, out. That's what they're afraid of.
Martin, what's worrying you the most right now? Are you spending your time or thought on?
Well, honestly, we have, this surge is going to come, which is really a collapse in the confidence of government. And that's when markets are going to start responding. We have 4 elections that I call, we're entering the period of the political year from hell. In June, you have the Brit exit. And although they're trying to pitch it, Britain without Europe, you'll fail, it's the other way around. Europe needs Britain desperately. And if Britain votes to get out, what's going to happen, you're going to see other countries voting the same way. And they're very much afraid of a contagion developing, and the EU just collapses. And this whole thing with what Merkel did with the so-called refugees, I mean, taking in, a couple million people, and they lost 600,000 of these people. They don't know where they are. So you're talking about, they're putting up borders again. You need passports, and all right. Everybody criticized Trump for saying, he wants to block Muslims from coming in. Okay, so that's not politically correct. So what does Cruz say? He's going to put in a bill that all Europeans have to have a visa. So, all right, I can't say just Muslims, so all Europe. I mean, they're looking at really collapsing the global economy. This is what's happening. So they're destroying it with every breath they take.
Martin, can you tell our listeners how they can follow your work, your writings, and learn more?
You can go to our website. It's armstrongeconomics.com. We don't sell advertising on there. I mean, the blog is free. It's more as a public service. So, but we try to bring in all the information from around the world and what's happening, so people at least can get a taste of what the trend really is these days.
Martin, thank you very much. Really enjoyed it, and we'll have to talk again. Thank you very much.
Well, thank you for inviting me.
Talk to you again. Bye-bye.
Okay.